Hey traders, welcome back to MarketPro Trading and the channel, where we turn everyday traders into consistent, confident pros. Today we're breaking down one of the most overlooked parts of trading, the best time of day to trade. Because in the markets, the clock is just as important as the chart. Every stock moves to a rhythm, and that rhythm changes throughout the day. Liquidity, volatility, and volume all spike and fade at predictable times. If you trade outside those windows, you're fighting the flow instead of surfing it. Let's simplify. The market open is chaos, high energy, fast moves. You get a lot of whips up and down, and the opportunity is for experienced traders. The midday, it's slower, more quiet, much less predictable. The close brings momentum and emotional volume back into play. You get a lot of movement at the close. They say the amateurs open the market and the professionals close it. Knowing when to step in and when to sit out can literally double your edge. The first hour sets the tone for the entire session. It's fast, it's volatile, and it's packed with opportunity. All that overnight news, pre-market positioning, and retail momentum flood in all at once, creating explosive movement and tight spreads. Pros love this window because liquidity is deep, price action is clean, and momentum is pure. But let's be real, it cuts both ways. This is where discipline separates winners from gamblers. If you don't come in with a clear trading plan before that bell rings, the market will write one for you, and it usually ends in red. Then comes what I call the lunchtime doldrums, that quiet stretch from about 11 a.m. to 2 p.m. Volume fades, volatility cools off, and the market just drifts. Institutional step away, do a nice long lunch, retail traders burn out, the algorithms take over. This is where most traders get chopped up, trying to trade in no man's land where stocks just kind of drift and don't really have any direction. They try to force trades that just simply are not there. Think of it as the market's nap time. If you're scalping or chasing momentum during this window, you're playing the wrong game. The moves are smaller, the breakouts fake out, and emotion starts to creep in. So instead of trading out of boredom, use this time wisely. Have lunch, go to the gym, recharge yourself. Review your morning trades, log your journal, scan for setups that could build into the afternoon push. The pros take a step back during lunchtime, so they're ready to strike when the energy returns. As the closing bell nears, institutional orders kick in. This is where trends resume, reversals finalize, and liquidity returns. Day traders can find second wind setups, especially continuation or end-of-day breakouts. If you've missed that morning move, this is your second shot. And here's the reality. You don't need to trade all day. The pros I coach at MarketPro Trading often trade just 60 to 90 minutes total throughout the day. You find your best time window, you master it, and you make it your edge. You track your results by the time of day, you'll start to notice patterns. When your trades perform best, when you get emotional, and when you force trades in a boring market. The data never lies. If you want help building your personal trading schedule from pre-market prep to post-close review, I can help you set that up step by step. At MarketPro Trading, I work with traders one-on-one to find your style, your tools, and your timing. Remember, great traders don't chase the clock. They own it. I'm Kevin Lloyd with MarketPro Trading, and I'll see you in the next video.